What's up, everybody? What's up, everybody? It's been a while. Yeah, I gotta excuse my car. Sometimes it's makes these little sounds and stuff. It's a beater car for a reason. It gets me from point A to B. You know what I mean? But yeah, wanted to connect in, tap in with you all. It's been a while. Today's a beautiful day where I'm at. And I just really just been out of the loop a little bit. I've been focusing on some other things. I got a baby due this week. My bad, y'all. It's a lot of gravel right here, so it's a lot of gravel. So anyways, I got a baby due this week, my daughter. Me and my wife having my daughter. I started my master's degree program in organizational leadership. So that's a whole nother thing, and I'm actually paying for that out of pocket. And this is kind of just a way of being financially savvy, what I did was, from my regular job, I built the skills I needed. I do mediations and such, and so I'm a certified mediator and everything. And so I built all these skills on the side while working my normal job, and then I was able to go for a job and get a significant pay bump of about $25,000 a year. So with that $25,000 a year, what I'm doing is I am paying for my master's degree program so that I can go and make six figures and over per year. So I'm kind of just building, stacking the deck for when I get to negotiations and such, especially with other businesses or school districts or whatnot, and so that I can secure that six-figure income. So that's kind of a strategy that I've been implementing. So instead of just, I got a pay raise and I'm going to buy a new car, I'm going to buy, some new shoes. I got all this money, I'm going to just spend like I'm rich. I'm not going to do that. You know what I'm saying? So I decided not to do that. I don't feel like that's financially wise. I'm able to stack more cash, have more cash available, which is needed right now, especially in this market, in this economic environment. And so, so I've been able to pay for my master's degree out of pocket. So that's kind of one update. So anyways, outside of that, it's been a while since I watched a lot of videos. I used to consume just so much content. I've still been watching videos here and there. I think I took about a good week and a half break, but I'm back on it. All right. So anyway, so I said the importance of having cash. I've talked about this quite a bit. At first, I despised cash. Cash is trash. It's about gold and Bitcoin, blah, blah, blah. But cash is king right now. Cash is king. The dollar is going up in value. Assets are going down in value. So if you had majority cash, you could buy, gold at, $16.60 an ounce or whatever. I mean, obviously that's not with the premium, but you get the point. You can buy Facebook at $140 a share. You could buy Intel at $27 a share. So cash is king right now. People are looking for dollars. And so being able to have that is very, very important. So that's one of the reasons why I've been focusing on stacking cash. Like, how do I keeping cash on hand? And things like that. And and also paying down your debts too. So it's kind of just a balance. I've still been buying some gold here and there. I know Rick Rule told me not to. I got enough, but the price went down. I was just like, it's cheaper. Let me buy a little bit. Let me just get a 1/10 ounce. So that's what I did, right? So anyways, I've been averaging in the Bitcoin too. I haven't bought any in a little while, since it was about 18,000 and I think 300. I think that was the last time I bought. It was in the 18,000 range, and now it's back up to 20. So I'm not going to be buying at this level. I'm gonna wait until it drops some more, either back to the 18s or hopefully 17s, which Gareth Soloway is predicting it's going down to 12. So I need to have cash on hand for when it hits that level as well. So it's important to have cash. The markets are continuing to go down, continuing to get pummeled. The Fed has been very hawkish, and pretty much, it's really just like the Fed's tightening. They're selling, assets off their balance sheet. They are raising interest rates. Mortgage rates just hit, I think, over 6%, I think. It may be going up towards 7%. So, those things matter. Those things matter in the market. Is it going to last forever? I don't think it's going to last forever. I don't think the Fed is going to be able to get inflation under control. So I don't think the Fed is going to be able to get inflation under control to their target range. Their target range is 2%, 3%, something like that. I think inflation's probably going to stay up more towards, maybe 4 or 5, and the Fed's going to have to just give up, because the markets aren't going to be able to take it. People are going to be so upset with just how much the interest rates are, and their retirement portfolios. So you got two classes of people, that are pretty much. I saw a comment come on, but I missed it. I'm driving, so I'm not looking at my phone too much. But I saw there's two classes of people. You have people that are that have investments, that have stock portfolios, retirement portfolios, all these different things, right? And these people are getting pummeled, so their portfolios are getting pummeled. Housing prices are starting to drop. Interest rates are high. All these different things, right? So when you're looking at that, that side, at some point they're going to get very upset. And on the other side, you have inflation high. So you have people that, work, low-wage jobs and such, and they're getting pummeled by inflation. So, and inflation is still high. So it's going to be hard to, the Fed is just really stuck, It's damned if they do, damned if they don't. And I think at some point they're going to have to reverse course, because it's going to cause some huge economic consequences if they keep tightening. One of those things is, the government tax receipts. Luke Gromen's talked about that. Government doesn't have as much money as they were getting when the asset prices were higher, off, capital gains tax, off freaking retirement portfolios and such. And so, the people aren't getting that income. The government isn't getting that income. So those are some of the things to, kind of really be aware of. So the Fed's in a tight spot, and at some point, the straw's going to break the camel's back, and they're going to have to reverse course on what they're doing. So that's kind of just my take on it. Also, there's issues in the Treasury market. The Fed is tightening, the dollar's going up, and the Japanese yen is going down versus the dollar. So Japan has started selling some of their bonds, their treasuries that they hold. Um, yeah, for sure. Yeah, that's, we got to wait till the Fed pivots, but, it's kind of just, I think my speculation is that, they're going to have to pivot at some point because they're going to start breaking, um, they're going to start breaking stuff, y'all. Like, to be honest, like, you have these other nations like Japan, like their balance sheet, their treasuries that they hold, they're having to liquidate some of their treasuries and everything. And, that could be detrimental. You have the British pound. There's issues with the British pound. Like, I think it's never been this undervalued versus the dollar in a long time, either in history or a long time, something like that. So, yeah, you got this whole energy crisis. The Fed's trying to reduce demand, but you still have the issue of energy not being abundant right now. And so right now we've been releasing from the SPR, and that's set to end soon. So, there's a lot of things to be very cautious of. I wouldn't say fearful of. Well, I would say I'm kind of afraid in some ways. I watched a recent interview with Luke Gromen, and he was talking about, one of his tweets said that if the Fed continues this path, this screams global depression. So who wants to experience a global depression? I sure don't, and he said that he won't sell his gold, especially if this gets so bad to where, they break it, they break the system, the dollar breaks, and everything, and you better have gold. And so I agree with that. Not just because I'm biased, because I love gold, but it's just common sense that, you know, dollar is fiat, and if the system breaks, then you better have something that's a real asset. Um, so if you had to choose one S&P 500 ETF, what would it be long term forever? Uh, I usually play the SPY, but I normally trade it. I don't really like the S&P 500 because I don't like the big S&Ps and stuff because like they're very like the companies within them are a lot of times overvalued and stuff. Right now, I mean, some of those companies are still overvalued, but they're definitely not as overvalued as they were. Um, and then the thing, uh, I would say, with ETFs, is for sure like you just don't know. You have to be able to research which companies are in there and like are those good companies. And so like me, I'm more of an individual company investor. If I hold in the ETFs, it'll be like a uranium ETF, like the Sprott Uranium ETF, or some of the Brazilian or some of the emerging market ETFs and such. But I may start buying the SPY at some point if it goes, a lot lower to where it's very, very cheap. I will buy the SPY for sure. I think we're already in a global depression. Only thing saving us is all the boomers retiring. I don't think there will be huge amounts of unemployment. Yeah, and that's interesting you say that because there's also a lot of talk about boomers coming back into the workforce because of inflation really hitting them. And you do have the government, promising to do cost of living adjustments to like SSI and stuff like that. And so I don't know how all that's going to play out, um, but I know that some boomers have had to go back into come out of retirement and go back into the workforce. But and there's also we haven't seen the huge uh, uh, a lot of jobs. Well, I haven't looked at the job numbers in a while, but for a minute there wasn't enough jobs being taken off the table, and usually when interest rates rise, then companies have to pay more on their debts, more interest on their debts, and then that ends up leading to like them closing positions or them laying people off, them not hiring as many people and stuff, and so and that affects employment. But yeah, so keep cash, hold real assets. I just think, I mean, like I've studied a lot of this stuff, and like I believe that it's gonna come to fruition. But right now, it's like I feel like we're getting closer to that day of reckoning. So yeah, keep cash, hold real assets, y'all. All right, y'all. Peace. I'll be back on more often and everything. Just been going through a lot of life stuff. The baby on the way, starting my master's degree and stuff. So, but I'll be back on. Uh, so yep, for sure. Appreciate you, CM. All right, y'all take it easy.